this FD01 for in S4HANA also. That's what we did, I think.
Okay, so thank you very much for that brief. So well, welcome to another session. In the last session, we looked at, like Patience has said, we looked at a couple of things. This class is a combination of FI and SD, so somehow we have to run both side by side. So for those who have not experienced SD, it's an opportunity for you to actually see how FI and SD actually works, or how they roll together. So we were able to look at some basic concepts. We looked at some configurations at the SD side. We looked at the partner and the business partner and the master data. We talked about the difference, right? We said that in S4HANA, one of the major differences is that in ECC you can just go, you can create your, when you're creating your vendor master data, you can go ahead once you create the account, once you create once you create the customer account and all that, you are done. You can just go and start creating your master data, right? And we still, like I said, the T code FD01 was still operational and all that. But in S4HANA, that's where one of the major difference actually is, right? In S4HANA, you have to integrate the customer master data to the business partner master data, and that is what took us to the synchronization, where we had to make sure that that's a cross component, and we had to do the synchronization to make sure that the customer or vendor master data synchronizes with the business partner. So there is an integration between vendor master data and the business partner concept. And we also established that in S4HANA, some transaction codes that we were familiar with in ECC, like FD01 to create customer master data, FK01 to create vendor master data, they have all been expunged, or they have been scrapped. We just have one T code to create, whether it's customer or vendor master data. And what's that T code? So the T code is simple. It's just 2-letter words. We call it BP.
BP.
So yes. So with BP, you can create both customer master data and vendor master data in one screen. And I'm just going to do that for those who were not on ground. So with the BP, for example, so just go to the transaction code bar and type BP. So this is different from what you used to find in ECC. So with the DP, remember we created one yesterday. It's still in our search term. Last class, it's still in our search term. So we just search, and you can see, you can actually see, if you double click on the line, when you have searched for the customer account, then you would basically see the information. And very, very important, we discussed last time, we said that for a business partner master data, we have 3 segments. We have the general data, which we call the BP row, which is business partner general. We have the company code data, and we have the sales area data or purchase organizational data. So in S4HANA, when you create in the general data, you have to extend it to the company code, and extend it to, if you're doing sales or sales SD or MM, you have to either extend it to the sales data. We're going to come back to this. During the class, we also understood that for you to successfully run your SD in the customer master data, you must define the tags. And that is where we actually stopped. We couldn't finish the SD part, but we're able to do all these other parts. So for the SD, so this data is in general, right? To extend, you click the edit sign, click the drop down, look for finance. This is customer finance accounting maintained. So when you do that, it's extended so you can see more fields. So we are the company code data. So from the company code data, you can actually extend further to the sales data. We're going to run through this transaction again while we complete the information we started. We'll run through this information again. But if you're familiar with ECC, you would know that this is the field looks alike, but the process of getting here it's a whole lot different, and the configuration for this is also different. So you might need to refer to the previous video and get more information about the configuration for the business partner and also how to create your master data. So to continue in this session, we're going to continue from where we stopped. Esther, you're welcome. We're going to continue from where we stopped. We're going to be looking at the tax. We're going to be looking at the tax, and we're going to see how to configure the tax in S4, and we will try to finish the creation of the master data because we could not do that as at the SD side. And okay, Jenny, you have a question.
Okay, I think you just mentioned it. I wanted to ask you why you've not extended to XD, but you said you were going to work on it. Okay.
Yeah, so yeah, we tried it, but we had the issue. We couldn't save because the tax was not done. So we'll do that now.
Okay,
Yeah,
sir.
yeah, we'll do that now. Also, we will check the SD. We'll check some configurations in SD, which will take us to just briefly SDMM integration, the main areas. Then we will look at, if time permits us, we'll begin CEO configuration, basically. So these are the three things we have for today. Let's see how far we can actually go. Okay, so like I said, we have the T codes for this. Actually, I have all the T codes for this, but the essence of this class is actually to help us experience SAP, right? It's not just so we have all the T codes for this. So I can easily say, to create tax, go to this T code, click this T code, and you probably get everything done in less than a second, right? But what we're trying to do here is to give you an experience, and that experience is for you to actually understand how um, how these things are done. Like, what is the design? Okay. Okay. Esther, you can't hear me, right? Esther says she has an issue with the audio. To turn on the audio in Apple laptop. Esther, unfortunately, I don't know how to do that in Apple. But why not connect with your phone for now? See if you can connect with your phone. Let me see if I can drop a message for her. Esther, can you hear me? Of course, you can hear me. Just a minute, guys. Please check your WhatsApp. I dropped something on your WhatsApp.
I'm sure if she was entering through this thing, she's supposed to click enter with audio when she's
Okay.
entering the line.
Okay.
Because I also
Okay.
use Apple. When you are entering, you enter with audio. Because
Yeah.
sometimes to enter with earphone or audio, so if
Yeah.
you choose audio, then she can enter with audio.
So Esther, if you can hear us, please enter. Okay. You can log out and enter. Log out. Okay, so let's see if that can be fixed. Esther, let us know if you have any issues. Okay, guys. So to do that, basically, we're going to start. We're going to be going to the back, and from the back, we would see how we can just look at how SAP designed this and how we can um, go through that process. So basically, everything about tax you will find in finance because it's a finance related activity, and you would find in general ledger accounting. Sorry, financial accounting global settings. Then you go to ledgers. Financial accounting settings. Then you go to ledgers. All right, in your ledgers, you would see the icon tax on sales and purchases. All right. Then you're going to see basic settings. So basically, we have three processes you follow when creating a tax. And of course, um, so uh, okay, Chuku, what do you understand by a tax? Just give us a background.
Okay, tax, um, let me start with is a source of revenue to the government. Government, depends on taxation from the citizens, from goods and services
Okay.
to, keep to its um um how will I put it? Okay, let me leave that.
Social
Yeah,
responsibility.
yeah, social responsibilities, fantastic. You got the right word, social responsibilities. So tax can be in terms of, payee tax.
Okay.
These are taxes that are deducted from the salary of the workers. It can
Okay.
also be on the purchase of goods and services. And each country have its own tax policies
Okay.
and tax rates, right? Like for Nigeria, we have two bodies that manages tax in Nigeria. We have the IFRS and the LIRS. FRS is the federal and the LRS is the state, right? So there are taxations that the federal handle and there are taxations that the state also handles. It all depends. And they
Okay.
all have their own basic tax rate. So basically, taxation is a source of revenue to the government.
Okay. Thank you very, 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 very much. Patience, your hand is up.
Yeah, so okay, there's also one tax also. You mentioned value-added tax and also PE tax, also corporate tax also, I think.
Yeah.
Also, government also takes this corporate tax, and there are different body, the different way government generates taxes, and they use this tax collected from people to carry out, I think, federal works like building schools or building hospitals, social amenities for the citizen back, and also they use this tax also to pay government workers that are also working in the government. I think that's what they use the tax for.
Yeah. Thanks. Thanks a lot. Thanks a lot.
Mm.
Thanks a lot. So basically that is what tax is. So it's a levy that is compulsory. It's not optional. It's compulsory and it's levied to businesses and to individuals at different levels. We have different kinds of tax. We have withholding tax. We have company income tax, like the corporate tax. We have VAT. We have different types of tax depending on your location. So one of your assignments in this session would be to, and I'm going to ask you tomorrow. The tax is to find out all the taxes that applies in your jurisdiction, in your current location, the country where you are, the state where you are. Get all the business taxes that applies to you. When we meet tomorrow, for the sake of knowledge, we're going to share, based on what taxes applies to businesses within our localities. It's very, very important. So wherever you are, please try to do that work for me so that we can learn. So if I find myself, for example, in Canada tomorrow, I can know the kind of taxes that applies there. Or find myself
From Germany first.
yeah, in Germany, I can also know the tax that applies there. So basically, thanks guys for the so so the essence of this is to set up the tax that will apply to the customers and the vendors such that we can account for these taxes when we withhold them or when the customers pay for them or when we pay to the vendors. And this tax is also reflected in our financial statements for reporting purposes. And of course, it's mandatory that you file for these taxes with the government. Some tax, like withholding tax, it serves as a credit to you, which you can use to reduce your company income tax when you are able to withhold that tax on behalf of the government. So for different taxes mean different things to the business. So we have the three processes of setting up tax. Except this tax we're looking at, tax on sales and purchases are basically VATs. So that's VAT. VAT is value added tax, and it applies different rates for different countries and different states. So the three steps is we have to do the basic settings, we do the calculation, and we do the postings. These are the three steps that you have to follow in setting up your tax. So if you find yourself in an SAP project, remember the essence of this class is to make it as real as possible for you. If you find yourself in an interview and they're asking you some of the things you did, if you say you did configuration, you have to also explain that you have to explain that you were part of that configuration and you also assisted in setting up the tax. When you're setting up a tax, there are three processes you have to follow. The basic settings, the calculation, and the posting. So you actually defined or you assisted in defining these processes. If you say you did tax configuration, while transaction code for learning seems very limiting, this is the essence why we take you through the back so that you can actually see the processes that relate to these activities, not just the T codes. You can see the structure, you can see how the processes you have to go through and the requirements, basically, right? So we'll start from basic settings, and in the basic settings, we're going to be looking at something like we're going to start with the calculation procedure, right? So we'll just double click on the calculation procedure. Just a minute, sorry. Okay, sorry about that. So once you execute this, for those who are also joining us, if you want to get the transaction code for these activities or activity, right click on the bar, go to display technical information. The last 4 digits of the document name is the transaction code. So that's why you don't necessarily need to cram these codes. They are available within the config or within the activity, within the IMG activity. So all you need to do is to right click, go to technical information. The last 4 digits most times is the transaction code for running this activity. So you execute this, double click on the first. Most times you would see some list of informations here, but I think for this setting, it's not updating basically. And we'll just have to double click on the first one. So let me start with this. There's supposed to be a name, but I think because we are using this sandbox, we're having some issues with the description. So the first thing is to define the procedures. The first step is to define the procedures. Now, basically, the calculation procedures talks about the way that tax will be calculated, the procedure that the system will follow in calculating that tax. So you can see that there are calculation procedures for virtually taxes for every single country, and our T code we're using US, so we can either use the existing tax procedure or we create a new one. So we're going to create a new one because we have our tax will have to be peculiar to the example we want to. So, but if you're in the US, if you're in the UK, if you're in any of these countries, SAP already has standard tax calculation procedures for your country. And of course, this tax applies to sales, right? That's why you cannot do SD without tax, because the salesman will always apply tax to their invoices. So that's another point. When you are talking about SD and FI, tax is a major integration or a major area between FI and SD. That's why we couldn't finish our master data without defining tax. So I'm going to copy from the tax US, which is a standard for US. So I'll just click on the side to highlight, then you click on copy. You can change the tax to tax IBTC. So that's our company code. Okay, so you can only give me IBT. So I'll do this as sales tax IBTC Nigeria. Just click on enter. When you click on enter, because this is standard, we need to copy the standard for us. So you need to copy all the activities basically. So say okay for 22 entries. So we have our tax IBT for IBTC Nigeria successfully created. Like I said, the tax procedure defines how this tax calculation will happen. Right, so select the tax you have created and we need to check the controls. So double click on control data. So you're going to see that there are basically taxes that have been defined. And we would see the calculation type and the accounting key, the condition type and the accounting key. Okay, so basically the condition types represent the different tax calculation methods, right? And the account key is the integration between the tax and FI or the GLs. The account key are the GL accounts that will be, it controls the GL accounts that will be selected when you are creating a tax. So there is a GL that whenever you apply taxes to, it applies to that GL in the balance sheet or in the balance sheet basically as a liability or as an asset, depending on the kind of tax you're creating. So the condition the condition types represents the calculation method. The account key identifies the different GLs that will apply. So you can note that down when you are setting up your tax. Okay, so we don't have the one for us here, so we need to copy. We already have a base. The base is tells us that when calculating tax we have to use the base which is from the invoice. So probably we're using the invoice amount as the base for our calculation of taxes. So I'm just going to, I'll look at the numbers I have here. I don't have, so I don't have 260. I'll do 260 and 270. We need to create two taxes. There are different types of taxes or different types of VATs, basically. We have the input tax and the output tax. So please take note of that. Okay, Jenny, you want to go?
Yeah, Mr. Kelechi, please, can you repeat the condition keys and the account keys?
Okay. The condition key. Now, this is a video, right? So
Yeah.
definitions you will have to watch later.
Oh, okay.
But I'll just give you that point. the condition types represent the different tax calculation methods.
Okay.
Condition types are for tax calculation methods. Account keys are for account keys identify identify the different types of GL accounts, which is more like the integration. Yeah. So condition types is equal to calculation method. Account keys is equal to the different types of GL accounts.
Okay, thank you.
And you can see that the condition type and the account keys is assigned to the procedure. So they are all part of the procedure. And of course, we have steps that defines the different conditions. So I'm going to create 2 steps for input tax and output tax. Input tax. So let me define that briefly, because it causes, when you're on, most times that causes some kind of confusion. When you hear the word input tax, it means a tax that is coming to you. So an input tax would be that is a tax that applies to vendors because an invoice is coming to you. So the simple way of explaining it is that when an invoice is coming to you, the tax that comes with it is an input tax. So when an invoice is coming to you from a vendor, the tax that applies to that vendor invoice is an input tax. When an invoice is leaving you to a customer, it's called output tax, because the tax is leaving you one issuing the invoice out. So out means you are the one giving out the invoice, and that is an example of that. Input tax is also VAT. An example of input tax, we can also see that as withholding tax, but that can still also apply to VAT, basically. So VAT happens from the vendor side. It also happens from the customer side. Withholding tax is just a special tax that is just a way of holding the tax for the government and remitting it, and the government rewards you with reduction of your tax liability. We'll come to that when we get there. But just know that when an invoice is coming to you from your vendor, you would most likely charge input tax. When an invoice is leaving you to the customer, which is SD related, you most likely charge output tax. They are all part of VATs. They are all types of VATs. Okay, so we are going to create the 2 types of VAT we have. They are not here, right? So we need to create ours. So we will just, I might just need to copy, but I don't know if that will be necessary. Okay, so let me just click on new. So I want to create 2 new ones. I'm going to put them as 260 and 250 and 260. So just say new entries. So the step is 250. The counter is 0. The condition type, right? So the condition type, we're going to search for the condition type. The first one we're creating is the output tax. So click on the drop down. SAP has the standard condition type. So for example, the condition type we're looking for output tax, let's look at W. I think it starts from there. So you might also, if you said you have done tax configuration, let me see if this is here. Okay.
To M, fronting MV.
Yeah, I want to. Okay, this now, this is the reason, right? I also need to teach you this. Now you can see that I'm trying to look for this list stops at J, but the option here is showing you that more than 500 input options. So, but the list here is not up to 500. It means that there is a restriction on this view, on this document that I just opened. So if you want to check, there's always a drop down here. You click on the drop down, you see that by default or by a user limited this search to 500. So it's only giving me output or hits up to 500. So I'm going to remove this and do it again and try to see if I can get to other alphabets. So you can see I have other alphabets here now. So you need to always check the maximum hits and make sure it's not restricted. So the output tax, we need to look for it. So I have an output tax here, but this is not the standard. The standard output tax is MWAS, and that's my condition type. That is my tax type. So I'm going to select the standard. Description, I'll just call this output tax. If I just click on enter, that will be fine. So when you're done with that, you go to so from means that it's going to be picking from the base, which is 10. The step 10 is from the base. I also have to check, I think it's 100, not 10. So I have to check that also. So it's fine to just pick the settings from the base. Then there are other options here, subtotal, required. These are all not necessary. What is necessary here is the GL account that will be tracking this output tax. So I'm going to go to the account key. So I'm going to look for the account key that will carry the GL account for output tax. I'll have to check if there is a maximum hit here. I'm going to remove it. So I'm going to go down. For output tax, we're going to be looking for the key MWS. That's the key for the output tax. Esther, can you hear me now?
Yes, I can, yes.
Welcome. Then the next step we're going to be working on, step is just the serial key, is 260. The condition type for input tax, I think is, we'll have to check MWVS. Okay. It's here by standard. Let's remove that. MWVS. Okay, input tax. We're also copying from the outputs. I'll show you that where that 100 is coming from. Then the account key, we have to also check, which is for input tax, which is should be VST. Okay. Yeah, VST. No, these are standards. So I'm not just picking anyone from there. I'm trying to get the standard from SAP. So when you're done, click on enter. So my two taxes, my two conditions have been created. I click on save. Then I have to create my own request. So create a new request. We can just call this tax configuration. Remember, I told you the essence of this is for you to be able to transport your configurations. Configuration. And you say, okay, then you're good. Okay, so I'm going to go back. So you can see where we're picking the 100 from. So all the calculations will pick from the base amount of the invoice. So that's why the from means that where are you running your computation from? So we are all running the computation from the base amount, not from any other condition types. So we'll go back. So we have successfully, you can save this again if you think you have not saved. We have successfully created our tags for our accompanying code. Now we have other steps here. This should be the access sequence. These are all, so this is where you get the list of the condition types. So if you, for example, go to MWST, MVS. So these are where we collected the condition types from. So this is the condition types table is where you get all the list of the condition types. This description is not up yet. I guess it's still a technical issue. Then the access sequence is a very, very sensitive area, but I'm just going to show you what it is. So basically, all the computations from the condition types pick their configuration or the program from the access sequence, right? So we will not, the access sequence for tax classification is MWST. So if you check, let me see something. Let me go to MVST. So if you check, if you double click on this, you are going to see the access sequence. The access sequence is what the condition type uses for calculation. So this is like a technical, it's like a program that is assigned to the condition types to help us with the calculation. So you can see the different controls, taxes, percentage, tax type, and all basic some other procedures. So the access sequence will need to be assigned to the condition type, and the condition types will need to be assigned to this guy, the procedures. So that's the flow. Access sequence to condition types to procedures. Right. So if you're done, we are done with the first, which is calculate tax procedure. It's a very, very important step. Now, the next thing we're going to look at is assign country to the calculation procedure. So why we were not able to run that process was because, okay, Jenny, are you raising up your hand?
Yeah, Mr. Kelechi. So you said the sequence is the process is access sequence, condition type, and procedure. But we started with procedure first.
Yes, because every other thing there are defined by standard. The procedure is the only area in the tax where you need to do the assignment. So basically the access sequence is defined by SAP, so you don't actually change that. The condition types is defined by SAP, so you don't actually change the standard. But what you can change is the procedure. So when you work on the procedure, you would see that in the procedure you have the condition types, and inside the condition types you have the access sequence. So that's just the flow of the transactions, right?
Okay, thank you.
So so the next is you have the next is to assign country to the calculation procedure, because for all your tax you have to define the country or the states for which this tax will apply. So just double click on the icon, look for your country. We're using the US, for example. So we have a calculation procedure there already by standard or by default. So we're going to change it to our own our own tax procedure, which is tax IBT. Then we're going to save. So what we have done is to assign the tax procedure to the country where which we hope that this tax will apply to. Then you click on save. And still under tax configuration, so it's fine. So here we can also check So we have done with the second process. We can check, just check the changes that can happen. So for the procedure, I think we have, these are the MWS, these are the various procedures, the account IDs. So we have, for example, MWST. So you can just check it. This is for output tax. You can just check this is the type of tax that is assigned to this process. Output tax. Then I think we are going to be we're going to be seeing this tax as a separate line item in our invoices. So by standard, this is all set. We're not doing anything here. So there are still some processes here. We have tax jurisdiction. This will apply to the US, where you have different local governments or different areas that this tax will apply to. For example, do you want to exit? Yes. For example, if you're in California and you're doing business in maybe another Texas, the question is where is your tax jurisdiction? Who is responsible for your tax? For example, there might be laws. So in Nigeria, we have what we call the residency rule or law. It is where you reside, that's where you pay your tax, irrespective of where you're working from. Right. So I can reside in Lagos, for example, or another city, for example, and go and work in Abuja. They are saying that it is where my permanent residency is. That is where my tax jurisdiction should fall. So there are various tax laws, basically. So you have to familiarize as a finance person, please. You have to go and read the tax that relates to your location. Right? Go and study the tax laws, even an SD, because your SD is supposed to find out all the sales taxes that apply to customers and to vendors and to inventories. The finance person is to go and research on all the taxes, both corporate taxes, personal income taxes, in the area where you are, because you cannot be a finance consultant and not know the tax within that jurisdiction. It's not, how will I put it now? It sounds absurd if you don't know the taxes that apply, to your company code or to your invoice. So please take this as a very serious advice. Go and study the tax that applies very well to your various locations. Okay, so I'm going to leave some of these configurations. These are define and check tax reporting dates. This is also so the financial year we are using will most likely fall within our tax reporting dates, but these basically are ABAP, their programs which we will not be able to work on. So basically, your tax reporting dates would apply to your invoices. Some people, you have to remit taxes, the preceding month, probably the first 2 weeks and all that. So, and at the end of the year, you have to, do your filings every month and make sure you are tax compliant, basically. Okay, so you have taxes for different countries. So we're going to go to the next activity, which is calculation. So we have done the procedure. The next step is to define the calculation. So when you go to calculation, for example, what we do here is basically to define the tax codes. Basically, tax codes are just identifiers of the of the condition types. When I mean condition types, I mean the tax types. So the codes are what we use to identify the different taxes we have created. So you define tax for sales and purchases. Just execute that. So enter the country for which you want to define. Now, by standard V, because if you see the condition type for input tax, you're going to see V. So we can say that V represents the input, but I'll check. I think A is, well, let me check that. So we can use codes like this to represent the various type of taxes. So let's say V0, for example. If you come here, you can see the type that represents V. So V represents your input tax. So input tax is the tax that is coming from the vendor. So we are going to have V0 means that this is zero tax. So it means that this particular invoice is not taxable, but maybe it's exempted. When you see 0, it means it's exempted from tax. The tax type, we can say V is input tax. You can, okay, I think this is fine. Every other thing is okay. Click on OK. This will take you to the tax rates. So in the tax codes, you have the tax rates. The tax rates are the rates that the system will use, the condition types will use to calculate the tax. You can see here our condition types we just worked on. So you can see the first one, MWVS. It is the condition type we just finished creating, but the system wants us to put the rates that will apply. So V0 is 000 because it means that invoice is exempted. Then you can go to properties to check, make sure the definition is okay. Go to tax account. So here we can check our chart of accounts. So we can see that we have not defined any GL accounts to calculate this. We'll come back to that as we go on. So you can also deactivate the line. So once you confirm the rate, you click on save. It's fine. Then you go to the next one, V1. V1 is the input tax for that. Will do that as 5%. The tax type is input tax. Then okay, this applies. This is automatically good. I think this is picking from my last configuration. So I'm going to click on save. Then I'll start with A0. A0 will be output tax 0%. Output is tax that applies to sales invoices, and which the SD person has to be aware of. 0 is fine. I'll save. A1 would be a rate. Input tax, output tax 7.5%. So depending on the rates that applies to your country, please go and read these things to go and find out the taxes that applies in your state. Like I said, in our next class, I'm going to ask. So come prepared. So we have created the tax codes for input tax, and we have been able to assign the tax code to the condition type. That is the configuration in the tax space. You have the tax codes, you assign the tax codes to the condition type and to the account keys. The next step is to assign company code to, if you do this, you're going to restrict the company code. You're going to determine, you're going to make the system determine tax based on the document dates, which I don't think is necessary. So if I tick, for example, this, you see tax determined by document date. I want the tax to be determined by the posting date or any other date for that matter. So I wouldn't want to restrict myself to this. So I would actually avoid that. Right. You can also specify the base amounts. You want tax to be calculated based on the base amount. I want to also leave that open. It could be on the subtotal, or it could be on the any of those amounts. So I'm going to actually ignore this too. So these settings will be determined by your client and by the business process that you have. Remember, I said that your configuration is a reference with your blueprint document. So you have to always check your blueprint document to make sure that these configurations are okay. Determine exchange rate for tax. No, we will leave all this to be open. Tax code for tax exempt sales. You can assign tax codes for, you can give a reason why a particular tax code is exempted from tax. If you look here, you're going to see some reasons. There are so many, so you can assign that reason to a particular tax code, right? The why this is not necessary is because once you put a tax code 0%, it means that it's exempted. So this is not so important. So after working on the calculation, you work on the postings. So we have defined the procedure in the basic settings. We have defined the tax codes where we assign the rates. The next thing is to define how this tax will be posted, which is the FI, which will be related to the GLs. So I'm going to go to define tax accounts. So here I'm supposed to impute the tax accounts to the various, we're going to input the posting keys to the various tax accounts. So let me check for, this is transaction. So I'll check for VST and WST. So VST is 40 debit, 50 credit. It's fine. WVS or something. WS. Remember, these are codes that we use. These are the account keys when we were doing our configuration. Is it WAS? It should be. Who can give me WST? I don't know if it's something like that.
MWAS.
It's not the three digits. MWS.
MWS.
Yeah, MWS. So it's 40 and it's 50. Right. So it's fine. I'm going to select. Okay, let me start with the MWS. Before I do this, I should have created a GL for both the output VAT tax and the input tax. So I'm going to create a new screen. So I can just go to System, New Window. Okay, then FS00. I'm going to create a new GL. Okay, so so Esther, are you there?
Yes, I am. Yes.
Sorry, your voice sounds cracked. So an output tax. Is it where will it fall? Is it what kind of account class? Is a balance sheet account, right?
It's on sale, so it's POL now. It's on sales. Hello?
Yeah, I mean the effect on the, where does it report in your financials? Okay, Chuku, where does output tax report in your financial?
Okay, yeah. Up output tax is the tax that you are paying, like when you are making the purchases, right? So
Yeah.
that is a liability. That means you are going to pay for it.
Okay.
Yeah, so it's a
Yeah.
liability account.
No, output tax is on sales. It's a tax that
Put that is on sales. Now you are making
is
sales.
that
It's on
yes, it's
sales.
a tax,
Making sales.
It's on sales. Okay,
Yes.
let's use an
but it's a
example.
liability. It's on sales, but it's a liability.
It's a liability account because you're going
Yes.
to
Why?
pay it.
Yes, because when you charge it to the customer, that money does not belong to you.
Yes,
The tax you are charging is a liability to you because you
you're
must
going to
pay
pay
it.
it. Yes.
If you don't pay it, you are going to incur the wrath of the government. So when something is a liability to you, it means that even though you're holding it, it's like a debt. When
Mm-hmm.
you go and collect money from somebody, you're holding the money, but it's a burden. Anything that is a burden is a liability.
Mm-hmm.
Just on a very light note, I was teaching this and I was telling the students that if you are if you have a girlfriend, if you're not married and you have a girlfriend, that girlfriend you're holding her, right? But she's a liability, she's a responsibility in the sense that you have to, whether you like it or not, you have to meet some of her demands. Just like in fact, even with married couples, once you marry a lady, you have to, as a matter of responsibility. So it's a positive burden in terms of relationship, but you have to. That's how liabilities are. Liabilities is a debt you must pay, right? So that's why when you hear liabilities, just it doesn't for some people who are not in the finance field, they might think liability is a bad thing, like a child who doesn't have sense. No, liability is just something that you're holding in trust for somebody or for an organization which you must pay. So when you collect that, when you're giving invoice and you put that in that invoice, you put VAT because you that is the this if you have a business, for example, and a customer comes in and you prepare an invoice for that customer, and under the invoice you now put the VAT and charge VAT. And for example, some of us, we go and buy things, our customers charge us VAT. You go and buy food, you go to eateries, you go to spas. After they give you the main invoice amount, they're going to give you VAT. That VAT they are charging is not their money. So don't quarrel them for the VAT because that VAT is not their money. The VAT goes to the government. If they don't remit that VAT, is a crime. It's a serious crime because it means that you have stolen money that is not your own. So that's why it's a liability. And our liabilities from our account range falls under 2000. So we're going to look at 2003 very fast. So we're going to create. So here we're going to select the account type, which is balance sheet, the account group liability, then the text. We're going to say this is output tax. So we're going to create, we'll just have one output tax account. I can't do for both of them. It's just time consuming. Output tax. Okay. Then when we go to control account, tax will always be okay. We can charge tax in foreign currencies too. So we're going to go to the tax category and we need to make sure that this is output tax. Then we need to sort this tax with the sort key.
Sorry, sorry, please. Sorry to take. Can you go back to task category?
Okay.
Okay, like most
Yes.
times it's advisable to, I don't know, in real life, I don't know, but most trainings I've listened to, it's
Okay.
advisable to use all tax type allowed.
Why?
Hmm?
Why?
Now, the reason being that I don't know.
You're not sure.
Just go
You're not
ahead.
sure.
I will come. I will remember.
You're
what
not
the question.
sure, Kechuku. It's not.
No. That's what I'm saying. That's what I'm saying. I will get back to you.
So there are ledgers that you put under all tax.
Oh, sorry.
Yes.
I remember, Kelechi. Sorry. It is not for the control account because this is like the control account. Like if
Yes.
it's normal GL account, like telephone,
Yes.
all taxes allowed. But for the control account, you limit it to the tax type. Yeah, go ahead. I think you're right.
Yes, of course. Yeah. So if you're creating like a sales GL and you want tax, you can put that. But for the control account,
you're right.
Yeah. So we have the control account, we have the create bank or interest, the field status group, which controls the fields in this GL. You can go to the drop down and check if there is anything related to tax. If there is not, so we have, this is tax clearing. That should have been good, but let me check if we have something like that. This is just tax. So if we don't have, we'll just use the general. This is not tax clearing, so no. So this is not a clearing account, so we'll just use the general. Then we'll click on save. Okay, so we can consider this when doing our cash flow statement. Click on save. Keep balance sheet in local currency only, so it's a warning, we're fine. All right, so we have created the output tax. So the next we need to do, and also in creating this, in fact, let me do something. We might have an issue because if you click, the question I wanted to ask was this: why are we not using the account code we have created for this? And I think we might come back to using this because we have already defined this account codes. We need to assign the account codes for them. But let's do that if we have an issue.
Do you know why you are not using the account code? If you are to use the account code, that means you have to create different sub-ledgers for each of the account code. But in this case, you are making it open, right?
Yeah. But we're going to see when we try to. Yes.
Sorry, Mr. Kelechi. If you don't use this particular account code, when you are, let me say, when you post an invoice or something, when you're trying to calculate the tax, it would not calculate this percentage for the customer. That this, we're doing this as an output tax. But if you use this ordinary output tax account, you have to impute the percentage on another field yourself.
Yeah.
So this will calculate.
So
yes.
Yeah, that's true. So that's why that's why we have to use the code we have defined for this particular transaction. So what we will do is we're going to edit this. Okay, it's already on editable form. We're going to go back to putting what we're supposed to put and come back to the control. I wanted us to make the error and see why. All right, but since it's done, let's just run through because of want of time. So I'm doing 0%. So I'm going to select, it's the same thing actually, but what we're trying to say here is that this is the same thing as this guy output tax, but the difference is that this is defined. So I mean, it's the best option we have to use. So we just assign the control to the tax we have defined. If we leave it open, we have to calculate it ourselves. So that's why we're using this. So we save this.
Sorry to cut you short. How about post automatically?
Okay, I think is also something we need to work on. Yeah, thanks. This will mean that now why are we selecting this? When the essence is that once we select VAT on an invoice, we are not going to be imputing the amount ourselves. So if, for example, you're using this control, if you're using this control output tax, you might not need to set this automatically because you're going to be putting the tax yourself. But if you want this, if you're using this control, it means that the system should automatically calculate it because you have defined it here. So you don't need to, on your own, put the figures. So you have to make sure that when you're posting that document, the system should automatically calculate the VAT for you. So thanks for that observation. This would have thrown up an error. We'll have still come back to fix this up. So thanks. So we're going to create the next one for, now we want to create the next one, but I don't want to create the next one afresh. I want to create it with a template of 2003. So I don't have to put all this again. So I'll go with template 2003. Put the company code IBTC. So you see, it's going to bring out all the information of the first one. So I don't need to stress myself with putting all those details. Just do this. So if I go here, you see everything is already set. So I just have to change this. Check here. It's fine. Then I just save. So this saves me a lot of time when I'm creating my GLs. The next one I want to create is the input tax. So the input tax. Esther, what will the, okay, Jenny, you still want to ask questions? Okay.
No, sorry, no.
Okay, so Esther, we want to create input tax. What account type will it fall into? Or Jenny, what account will it be? Will it be an income, expense, balance sheet? What account do you think it will be?
Wait. I need to just think. I know
Okay,
it's going to be a balance sheet too.
yeah, but you don't know why. So, okay, Chuku, don't worry,
Finance
we'll explain.
people, accountants, you
Yeah.
help me.
Okay, Chuku, please help us.
Even as an accountant, it gets confusing sometimes. Okay, one,
Yeah,
it gets
it's
confusing. Yeah,
confusing.
because I've also been in these shoes
Yes,
before. It's a
gets
balance
confusing.
sheet account. If
Yeah.
our input tax is a liability account, it means that our output tax will be an asset account. Because
We just did output.
yeah, sorry, we just did output, which is a liability
Yeah.
account. Fantastic. That means
Yeah.
our input is definitely going to be a pay because it moves in opposite direction.
That's a smart way of saying it. But that's not enough reason, though. Okay.
It's really
Yeah.
confusing.
It's confused. Before I got this, it took me years in the accounting profession.
I'm telling you.
Before you understand how this works. So the thing is that now this is input tax. Input tax is from, remember I said input means that you are receiving an invoice from the vendor. So invoice is coming to you and the vendor would have charged VAT. So for you it's an input tax. However, that tax that the vendor has charged you in some countries, or not even in some countries, ideally at the end of every month, if you, as an accountant, when I was practicing, we do what we call tax reconciliation. So when you are filing your VAT for the end of the month, your output tax, which is the tax on your sales invoice, minus your input tax, which is the tax that your vendor charged you, is what the difference is what you will pay as your VAT, because that input tax is like a credit, is like a plus to you. So the input tax is an asset. Why? Because it will reduce your output tax. So the input tax is a burden. It just reduces the burden of the output tax. And if you're filing for VAT I'll speak for the one for especially in Nigeria, when you get the VAT form, you're going to see output tax. Under the output tax, you're going to see input tax. The difference between the output tax and the input tax is the actual tax VAT you're supposed to file and pay to the government. So it's just like withholding tax, but the difference is that this is VAT related. So the idea is that when your vendor charges you, you help the government to withhold that tax. You help the government to collect that tax on behalf of the vendor. So instead of paying the vendor, so vendor adds that tax to your invoice. So at the end of the month, you're supposed to use that tax that the vendor has charged you, because the vendor will actually remit it to the government. Use it and reduce your output tax. So at the end of every month, the difference between the output tax and the input tax is the VAT, is the actual VAT you're supposed to file to the tax authorities. So your input tax is an asset to you. It's a very, very serious asset. And it is used to reduce the output tax burden. And the difference is what you file as VAT when you're filing your VAT. So that's actually the difference of these two. And the way I understood it is where the invoice is coming from. If the invoice is coming from me, if I'm, for example, I'm the company, if I'm the one creating the invoice and giving to my customer, is called out. So the invoice is going out. So the tax that is in that invoice is output. If the invoice is coming to me from the vendor, it's called input tax. And the difference between the input tax and the output tax is the actual tax VAT I'm supposed to file to the tax authorities. So that's how it works. That's the difference. And it took me some years to really, and some practice to really understand
Same
how.
here.
Yeah.
It took me time to really understood even the accounting, right?
Yes, yes,
It's
yes.
really
It's
confusing.
can
Mr. Kelechi, thank you. Nice explanation.
all right, all right. So we are going to create our asset account for the input tax. So our asset account, we can do its current asset, so we can do 1062. 1062, and we can create. So this is balance sheet. This is I'll put this under liquid. Oh, liquid starts from 16, sorry. Liquid starts from 16. So 1602. Guys, can you hear me? Hello?
Yes, yes,
Yes.
yes.
Sorry, I had a network glitch. Okay, this thing will go off some point. Sorry, I think the system is taking some time. I just need to stop it. Okay. Okay, so all my screen has gone off. So we're creating the tax. So 101602. So we can create balance sheet front. So have input tax 0%, tax 0%. We can make this input tax 0%. Field status post automatically. So save. Then we will create 1603 with the template of 1602. So this would be input tax 5%, tax 5%. Ensure that everything is good. I just have to change this. Then I'll save. So life is fast. All right. So we're going to go back to the config and find our way. So this is financial account. So we're in postings. So we are defining tax accounts. So we'll start with VST. VST is the input tax. So select this, go to the rules, double click on the rules. So remember the VST was assigned to the condition type MWVS. You guys can hear me, right?
Yes, Mr. Kelechi.
Yes.
Okay. So it was assigned to the, oh, this is chart of account, sorry. IBTC. So select your chart of account. So IBTC is not here. So what we are trying to do, we are trying to assign the account type, the tax account type to the company code. So our company code is not here. So say new entries. Our chart of accounts is not here, sorry. So our chart of account is, what is our chart of accounts? I don't think it's IBTC. Let me check.
Go to IBCA.
IBCA. So let me find it first before. Okay, it's not here. So I'll tell the system to assign the tax code to IBCA. Then click on enter. Then select this and go to accounts. So here we are supposed to assign the GL. So new entries, the tax code V0. Is it V we're doing? VST, yes. V is the input tax, right? Yes, this is VST, yeah. V0. So we'll go to the GL. V here is V0 is input tax. This V1. Okay, sorry, let's just select. Where is my, I think something is wrong here.
You are right. Kelechi, you're
No,
right.
yeah, let me go. Okay, let me
Yeah,
go
go
to V.
there. Yeah, view one
Okay,
fantastic.
I603. So click on enter. Okay, so click on save. So say yes. So we have been able to assign the tax account ID to the GL. So that's the essence of this. And we have also assigned this to the chart of accounts, the process to the chart of accounts. So we're going to go back. We're going to look for the posting key of output tax, which is MWAS, I think so.
You're on chart of account.
I'm in chart of accounts. Oh, sorry, my dear. So let's go to AS, I believe. MWS. MWS. So select MWS, go to the rules. There's no chart of account, you can check. There's no chart of account for the output tax. So new, and the chart of account to the tax code. Save, select, attach the tax code to the GL. So this is A0. The output tax. This is A1. The GL for the output tax. Okay, this should be 2004. You're not going to save. Go back, go back, go back. So I've successfully defined the tax accounts. So you have the assigned country and tax code to GL. This is not necessary. This will limit this. This will limit the chart of accounts to the tax code. So I can actually ignore this. Let me see. So let's say new entries. Yeah, this is like creating a new chart of accounts. Then you can assign it to the tax code. This is not necessary for me. I've already done the chart of accounts and assigned it to the tax code. Okay, so this is define exchange rate difference posting, define task, assign task code to non-taxable transactions. So here, very, very important activity. If we have non-taxable transactions, we should be able to assign the tax code to them. So we are supposed to do V0 and A0. So let's check for our accompanying code. So this is supposed to be non-taxable V0 and A0. A0. There's a tax jurisdiction here which I don't think is necessary. I don't want to limit my tax. So I'm going to save this. Okay. So I think as at this point, let me check if there's another thing here. Cross company code transactions. We're not working on this now. Okay, so we are done with our tax configuration. We'll just check this in a second and move and take a break. So we were trying to create our customer master data when we had tax issues. So we're going to continue. So go to BP. The transaction code for business partner is BP. We'll search for the customer. So let me just create a new one so we can just flow with that together. So I want to create a new customer account. The step starts from the T code BP. Go to organization because it's a company we want to create. I'm going to be fast. The first role is the business partner and is in the general data. So I'll go to title company. So I'm going to say this is I'll just call this limited. The search term is JJ. Very, very important. The address, the city code, 5 digits, LA, country, US, state, LA. You can actually put some language here. Yen, telephone, this. Go to address overview. The address is fine. Identification, legal form, the industry, if you like. Control, BP type is fine. Payment transaction. If you have the bank account details, when we do the banking, we're going to sort this out. You go to status. You can block. You can also lock this customer. So we are done with the general data, which is the general data we're in. Click on enter to confirm, then save. So that's the first step. It has generated a business partner number 185. After creating the general data, we need to extend this general data to the company code data. So what do? We use this switch between display and change icon. If you don't do this, this will not be available. So if I save it again, for example, and I click the drop down, okay, I think it's on edit. It's actually edit is actually active. Okay, so you see now that I can only see 2 options. But if I use the edit sign, I can see more options. So we're going to extend it to financial accounting for customer. So customer financial accounting. So here we are extending it to, once you do that, this company code becomes active. Click on the company code icon, select the company code for this customer. Click on enter. It opens up. Put the reconciliation account, which is receivable, sort key, then every other information that you think is necessary. Customer payment transaction. Here you have things like the payment terms, payment methods, and the rest. Customer correspondence, we have Dunning Clark, insurance policy, customer status. Here you can also block the customer from posting. Then we have withholding tax if this applies. If you're done, click on save. Now we have extended from general data to company code data. You can see the next thing we need to do is to extend from company code data to sales data. Patience, you're there, right? Patience, are you there? Okay, so we'll move on. You guys can hear me, right?
Yeah, we can hear you.
Okay, so to extend to sales, I'll click on the edit sign, click the drop down. Okay, it's not there, so click the drop down, click the edit sign, click the drop down. Then we'll look for, I think we used customer general. Let me check. We use custom, no, it's consumer. Okay, customer. So once we use the customer, you see the sales and distribution module becomes active. So the SD guys will be the one to manage this process, right? Patience, are you there? But she needs to provide me with some of these keys.
Yes,
You're not...
I'm here.
Okay. So you go to sales and distribution, sales organization, distribution channel. We did all these configurations for SD. They are here because we tried to enter them the last time. So click on enter. So the price group is 01. The currency is USD.
Yes.
Okay, this is fine. Shipping. Delivery plant. I don't know whether we put
IBTC, yeah.
shipping conditions. Okay, we said standard. Point of delivery relevant, no. Then we went to the next function, billing. Invoice dates. This is subject to invoice processing. Intercoms.
I think S works or so. Or what do you put? S. You can put S works in intercoms.
No, we use FOB.
Okay, FOB free on board. Yeah. Yeah.
On board payment terms, we use the same payment terms as the
14 days or something. Okay. Sorry.
yeah. Credit control area. We have we created IBTC.
IBTC, yes.
Okay. So let's check. Okay, so this is where we stopped, right? Account assignments group. Say this is for domestic revenues. So this is why is this not bringing my taxes? So let's check this. Tax jurisdiction code. This is taxable. County sales. I think there is something wrong with this. Tax jurisdiction. Oh. I think this has to do with some configs that we did. That is why tax jurisdiction came up.
Yeah, you
my,
deleted it.
yeah.
Yes.
Came up in my configuration. Tax, but this is not tax categories. That's why I'm worried. Need to check the XSD configuration. To check the SD config. This is not our tax category actually. County sales, city sales. Okay, so.
But why is it defaulting? Why is this tax category defaulting?
It's from the configuration. Let me check the company code. To be from the configuration. Let me check this. No, it's price structure, definition, financial.
I'm not sure it's coming from. I think is the config you did on SD. Go and check your SD config.
Yeah, but taxes. Just a second. There's a place where okay, let me check here.
Found it from here.
Tax jurisdiction is not here.
No, it won't be there, Mr. Kelechi.
It's under that tax procedure. Go to tax, the configuration of tax.
I think as
Go to the tax configuration.
No, it's not.
No,
Just
this sales and distribution.
Just a second, guys. Jurisdiction. Okay. This happened before tax, so it's not even the. There's a place where I have. Okay. I'll have to get back to you guys on this. I have to get back. But
This
let
is
me
the love
check.
of SAP, Mr. Kelechi.
You said?
I said this is the love of SAP. Problem.
Yeah.
Problem.
Exactly.
Yeah. That's what it is.
Go to where we
It
started
defined.
our
It
class
defined
configuration.
the system. Yes. Let me check this. Tax reporting date active. Okay. Check. Let me check this guy. Okay. What happened? Why are you shouting?
No, sorry. I give you an idea. Not for
Oh,
the
oh,
trading.
oh, 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 oh. Is this guy?
Company
This
code
setting is coming from this
170.
guy.
I was telling you that, Mr. Kelechi, that you deleted the jurisdiction.
Why?
7,000 something.
Yeah, why this whole thing is coming is we copied the settings from this guy.
Oh.
Yes. Now this number, this 700
This
something,
number.
we have to delete it.
That is that's the danger of
IBTC now.
No, we deleted it when it populated.
Yeah,
we
need to add it. We need to add it. We need to add it. 770. Okay. We need to add it. It's part of the setting that came with this company. So I need to check something about this guy. Just a minute, guys. Let me check.
This is why I love SAP. I don't just know why. I'm just happy.
Yeah.
Yeah, I mean it's fun. I can sit with you guys from here to all this is I'm doing is because somehow I need to check 700. There's something about that company code that I'm missing. Yeah. Doesn't even have address. Doesn't even have address. Company code. Now yeah, company code. Something about the tax of this guy. Okay. Let's go and try. What else? Let me check this guy. It's not even here. Okay. Okay, so let me delete this. Problem with this is to start doing this thing again. So I'll have to save this. I cannot continue until I provide that guy. So I'll do it again. Let me see. Let me go out and see if to allow me now. I need to check. So BP, search for the guy. JJ. So extend to company code. Where are you now? Customer maintained. Okay. Let me extend to company code. Let me see. No. Customer new. Okay. There's another one I use. Okay, let me check this one. Okay, so company code is here. Then extend to customer. Okay, sales and distribution. The Wahala process. If it's FI now, don't work out they go where they go. Verify. Okay, yeah. This thing has to change. This thing has to change. Output tax. I'll define my output tax. I will have to check this guy. How to check?
Do you know what? You can leave it, check it out. We can jump and pass for now.
Yeah, sure. We'll do
Check it
this.
out. Yes.
Because when I come to my company code, the output tax is supposed to change to the ones I've created. So we have something wrong with this field. So I'm
Mr.
going to
Kelechi,
look
can
at.
you click on the error sign? Let's hear what it's saying.
Okay. Sorry, just a second.
I guess it's the tax.
It will tell you to do tax. It will tell you that the tax you have done is not defined.
Okay.
The tax you have
Yes.
done is supposed to come here. It's supposed to just come here. The MSWT and all that is supposed to come here. But unfortunately.
But another question, Mr. Kelechi, is it USA that you used for the configuration?
Yes, but not these tax categories.
Yes, that's why I think this tax category is what's giving us the problem.
Yes, that's why I'm saying that this tax category is not assigned to our company code. So and this category is coming from the company code that we copied, I believe so.
Okay, can we look at this tax category and assign it to our company code? This particular.
You're clicking it, it's not calling out anything.
No valid.
Just to pick up something. Because it's not picking up because these values are not tied to.
Yeah, it's not defined.
Yeah. So the thing is that this is UTXJ, UTX2, UTX3. So for example, if I go here, let me check here. This is error. This is error tracing.
Okay.
UTX, you can find them in the procedures. Let me check the procedures. So if I come here,
Mm-hmm.
I'm not seeing you.
UTS. Or maybe you use the position to find it.
This is not even in the procedure. This is in the okay. So let me go to tax US. Let me find where this thing is. So this is the jurisdiction side. Look at them here.
Look at USJ.
So
But
check
UTS is not there.
UXJ. This is
USJ,
tax jurisdiction
USJ is there, but UTS 2 and 3 is not there.
2. Yeah.
Hmm.
So let me check this guy. So let me check the condition types. Just finding, let me just know where these things are coming from, so that we can just adopt them. MNOPQRST. It's not even here. XYZ. Okay, so I might need to, there's a serious issue with that. Let me see this. This is UTX tax category. Mm. Oh, I see. That's the condition type. Okay, let me check. Okay. So I think we'll come back to this. It will take me some time, but I need to find. Okay, let me check. I've not done. Let me check something. Let me just check something. Let me confirm something. Let me confirm something. Just a second, guys. Okay. I think I'll check it from here. Let me check something. Data underscore testing. Let me check something. It's not here. Okay, this is this. Let me check this. Okay. This has not been extended to SD. Okay, so guys, I will check this, and my best bet is that this is an issue with copying. I copied some settings from the T code, and it is giving me some errors I need to look deeper into. But if I don't find my way around it, I will just do a rush. I will just create a new company code and copy most of the settings from this one so that we don't have issues as we move on. So we are going to take a break, a very short break, maybe 10 minutes break to just stretch our bodies. When we come back, we'll look at some key integrations, then look at the CEO and call it a day. We started a little bit late, so in 10 minutes time, let's just stretch. We'll be back to exactly 10 minutes. We'll be back to continue from where we stopped. Is that fine?
Yes. Amen.
Yes.
Okay. Okay.
Okay. 10 minutes then.
Yeah.